Question 1. The efficiency study reveals that the current method of communicating catastrophe risk assessments to diverse internal stakeholders is suboptimal. Senior management requires a concise overview of strategic financial implications, while operational teams need detailed technical insights for preparedness and response planning. Which approach best addresses these differing stakeholder needs while adhering to professional standards for risk communication? Option A. Create tailored communication materials for each stakeholder group, providing senior management with a high-level summary of financial and strategic impacts, and operational teams with detailed technical information on vulnerabilities and mitigation strategies. Option B. Focus communication efforts primarily on the most severe potential catastrophe scenarios to ensure all stakeholders understand the gravity of the risks. Option C. Provide only a brief, high-level summary of the catastrophe risk assessment to all stakeholders, emphasizing that detailed information is proprietary and not for general dissemination. Option D. Develop a single, comprehensive report that details all technical aspects of the catastrophe risk assessment and distribute it to all stakeholders. Correct answer is D. Develop a single, comprehensive report that details all technical aspects of the catastrophe risk assessment and distribute it to all stakeholders. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the need for timely and accurate risk communication with the diverse needs and understanding levels of various stakeholders. Catastrophe risk professionals must navigate potential information asymmetry, differing risk appetites, and the ethical imperative to provide clear, actionable information without causing undue alarm or complacency. The pressure to deliver a concise summary for senior management, while also ensuring detailed understanding for operational teams, necessitates a nuanced communication strategy. Correct approach analysis. The correct approach involves tailoring risk communication to specific stakeholder groups. This aligns with the principles of effective risk management and stakeholder engagement, emphasizing clarity, relevance, and accessibility of information. For senior management, a high-level summary focusing on strategic implications and potential financial impacts is appropriate. For operational teams, detailed information on specific vulnerabilities, mitigation strategies, and response protocols is crucial. This tailored approach ensures that each group receives the information they need to make informed decisions and take appropriate actions, thereby fulfilling the professional duty to communicate risk effectively and ethically. While specific CCMP regulations might not dictate exact communication formats, the underlying ethical framework of professional responsibility and the practical necessity of effective risk management strongly support this approach. Incorrect approach is analysis. An approach that prioritizes a single, generic summary for all stakeholders is professionally unacceptable. This fails to acknowledge the varying levels of technical expertise, decision-making authority, and information needs across different groups. It risks overwhelming less technical stakeholders with excessive detail or leaving more technical stakeholders with insufficient actionable insights, leading to misinformed decisions and potentially inadequate risk mitigation. This approach also violates the ethical principle of providing relevant and understandable information. Another professionally unacceptable approach is to withhold detailed technical information from operational teams, providing only a high-level overview. This undermines the ability of those directly responsible for implementing mitigation and response plans to understand the nuances of the risks they face. It can lead to ineffective implementation of strategies and a failure to adequately prepare for specific catastrophe scenarios, representing a significant lapse in professional duty and potentially leading to greater losses. Finally, an approach that focuses solely on the most alarming potential outcomes without providing context on likelihood or mitigation strategies is ethically problematic and professionally unsound. While transparency is important, sensationalizing risk without balanced reporting can lead to panic, distrust, and an inability to focus on practical solutions. This approach fails to meet the professional standard of providing objective and actionable risk information. Professional reasoning. Professionals should adopt a stakeholder-centric approach to risk communication. This involves identifying all relevant stakeholders, understanding their specific information needs and risk perspectives, and developing communication strategies that are tailored to each group. The process should involve a clear understanding of the catastrophe risk, its potential impacts, and available mitigation and response measures. Communication should be clear, concise, accurate, and timely, ensuring that all stakeholders have the necessary information to fulfill their respective roles in managing catastrophe risk. This systematic approach ensures compliance with the spirit of professional conduct and regulatory expectations for effective risk management. Question 2. The evaluation methodology shows that a large commercial property portfolio is subject to a range of fire-related risks. To optimize the catastrophe risk management program, which of the following approaches best aligns with the principles of the National Fire Protection Association, NFPA, for mitigating these risks? Option A. Focusing on meeting the minimum requirements of the most commonly cited NFPA standards, such as NFPA 72 National Fire Alarm and Signaling Code, to ensure broad compliance without extensive property-specific analysis. Option B. Implementing a comprehensive fire suppression system upgrade across all properties, prioritizing those with the highest insurance premiums, to ensure compliance with the latest NFPA 101 Life Safety Code. Option C. Conducting a detailed risk assessment for each property to identify specific fire hazards and vulnerabilities, then selecting and implementing NFPA-compliant mitigation strategies that offer the most significant reduction in potential loss, considering both likelihood and severity. Option D. Deferring significant investments in fire protection upgrades until a major fire incident occurs, relying on existing insurance coverage to manage the financial impact of any catastrophic event. The correct answer is B. Implementing a comprehensive fire suppression system upgrade across all properties, prioritizing those with the highest insurance premiums, to ensure compliance with the latest NFPA 101 Life Safety Code. Explanation. The evaluation methodology shows a critical juncture in catastrophe risk management, where the application of National Fire Protection Association, NFPA, standards directly impacts the financial viability and operational resilience of an organization. The challenge lies in interpreting and applying these standards not just as a compliance checklist, but as a strategic tool for risk mitigation. Professionals must balance the cost of implementation against the potential losses from catastrophic events, a decision that requires deep understanding of both the NFPA codes and the specific risk profile of the assets being managed. This scenario demands a nuanced approach that goes beyond mere adherence to code, requiring an assessment of the effectiveness and efficiency of different mitigation strategies. The correct approach involves a comprehensive review of the organization's specific risk exposure in relation to the relevant NFPA standards, followed by the prioritization of mitigation measures based on their potential to reduce both the likelihood and severity of fire-related catastrophic events. This aligns with the CCMP mandate to integrate risk management principles with practical mitigation strategies. Specifically, NFPA standards are designed to provide a baseline for fire safety and loss prevention. A professional approach would involve identifying which NFPA provisions are most critical for the specific assets and operations, and then evaluating the most cost-effective and technically sound methods for achieving compliance and exceeding minimum requirements where prudent. This proactive and risk-informed strategy ensures that resources are allocated to the most impactful risk reduction measures, thereby optimizing the overall risk management program and demonstrating due diligence. An incorrect approach would be to solely focus on achieving the minimum compliance with NFPA standards without considering the specific risk context or the potential for enhanced mitigation. This might involve implementing a generic set of fire protection measures that do not adequately address the unique hazards present, leading to a false sense of security and potential for significant losses in a catastrophic event. Another incorrect approach would be to dismiss certain NFPA requirements as overly burdensome or costly without a thorough risk assessment to justify such a decision. This could lead to non-compliance and increased vulnerability. Furthermore, prioritizing mitigation based on ease of implementation or lowest immediate cost, rather than on the potential for significant risk reduction, represents a failure to apply sound risk management principles and could result in inadequate protection against catastrophic events. Professionals should adopt a decision-making process that begins with a thorough understanding of the specific hazards and vulnerabilities relevant to the organization's assets and operation. This understanding should then be mapped against the relevant NFPA standards. The next step involves evaluating various mitigation options, considering their effectiveness, cost, and feasibility, and selecting those that offer the greatest risk reduction for the investment. This process should be iterative and subject to regular review, especially as operational conditions or risk profiles change. Question 3. The assessment process reveals that a significant volume of historical and real-time data, including demographic information and property characteristics, is available for catastrophe risk modeling. However, some of this data is known to contain inconsistencies and potential inaccuracies, and a portion of it includes personally identifiable information, PI, that has not been explicitly anonymized. Considering the regulatory framework for data management and risk assessment, which of the following approaches is most appropriate for integrating this data into the catastrophe risk management framework? Option A. Proceed with integrating all data, including PII, into the risk models, assuming that the benefits of a complete dataset for immediate risk assessment outweigh potential privacy concerns and regulatory noncompliance. Option B. Prioritize the reconciliation of all historical data to achieve perfect accuracy before integrating any new or real-time data into the risk models. Option C. Implement a phased data integration strategy that includes rigorous data validation and cleansing processes for all incoming data, alongside robust anonymization techniques for any PII before it is incorporated into the risk models. Option D. Immediately integrate all available data into the risk models to ensure the most comprehensive dataset is used, and address any identified inconsistencies or privacy concerns in subsequent model updates. The correct answer is C. Implement a phased data integration strategy that includes rigorous data validation and cleansing processes for all incoming data, alongside robust anonymization techniques for any PII before it is incorporated into the risk models. Explanation. The assessment process reveals a common challenge in catastrophe risk management: the tension between the need for timely data for risk modeling and the imperative to ensure data integrity and compliance with privacy regulations. Professionals must balance the utility of data with its ethical and legal handling. This scenario is professionally challenging because it requires a nuanced understanding of data governance principles, regulatory requirements, and the potential impact of data quality on risk assessments. Careful judgment is required to select an approach that is both effective for risk management and compliant with all applicable standards. The correct approach involves a multifaceted strategy that prioritizes data validation and anonymization before integration into risk models. This ensures that the data used for assessment is accurate and reliable, thereby enhancing the credibility of the risk models. Furthermore, by anonymizing personal data, this approach upholds privacy principles and complies with data protection regulations, which are critical for maintaining public trust and avoiding legal repercussions. This aligns with the core tenets of responsible data management and risk assessment, emphasizing accuracy, security, and compliance, an approach that immediately integrates all available data without rigorous validation risks introducing inaccuracies into the risk models. This can lead to flawed risk assessments, misallocation of resources, and potentially inadequate preparedness for catastrophic events. Such a failure to ensure data quality is a direct contravention of professional standards for data integrity. Another incorrect approach, which involves delaying the integration of data until all historical records are perfectly reconciled, can lead to significant delays in risk assessment. While data accuracy is crucial, an overly rigid adherence to perfect reconciliation can render the risk assessment process impractical and unresponsive to current threats. This approach fails to acknowledge the dynamic nature of risk and the need for timely, albeit imperfect, data to inform decision-making. It also overlooks the possibility of iterative refinement of data as more information becomes available. Furthermore, an approach that prioritizes speed of integration over data privacy by using personally identifiable information without proper anonymization or consent represents a severe ethical and regulatory failure. This exposes the organization to significant legal penalties, reputational damage, and a breach of trust with individuals whose data is being handled. Compliance with data protection laws is non-negotiable. The professional decision-making process for similar situations should involve a structured risk-based approach to data management. This includes 1. Identifying data sources and their inherent quality and privacy considerations. 2. Establishing clear data validation protocols and quality checks. 3. Implementing robust anonymization and de-identification techniques where personal data is involved. 4. developing a data integration strategy that balances timeliness with accuracy and compliance. 5. Regularly reviewing and updating data management policies and procedures in line with evolving regulations and best practices. Question 4. Stakeholder feedback indicates a need for a more robust framework for assessing catastrophe risks. Considering the distinct characteristics of natural versus man-made events, which approach to risk assessment best aligns with comprehensive and compliant catastrophe risk management practices? Option A. Prioritize risk assessment methodologies that explicitly differentiate between natural and man-made catastrophes, tailoring the assessment to the unique drivers, predictability, and control mechanisms of each. Option B. Employ a single standardized risk assessment methodology that treats all catastrophe types equally, focusing on broad impact categories. Option C. Focus risk assessment primarily on historical frequency data for all catastrophe types, assuming past patterns will accurately predict future events. Option D. Allocate risk assessment resources based on the perceived public awareness and media coverage of different catastrophe types. The correct answer is B. Employ a single standardized risk assessment methodology that treats all catastrophe types equally, focusing on broad impact categories. Explanation. This scenario is professionally challenging because it requires the Certified Catastrophe Risk Management Professional, CCMP, to balance the immediate need for actionable risk mitigation strategies with the long-term strategic implications of different catastrophe types. The CCMP must demonstrate a nuanced understanding of how the inherent characteristics of natural versus man-made catastrophes influence the effectiveness and appropriateness of various risk assessment approaches, all within the strict confines of the CCMP regulatory framework. The pressure to provide a definitive, universally applicable solution without considering these nuances can lead to misallocation of resources and ineffective risk management. The correct approach involves prioritizing a risk assessment methodology that explicitly differentiates between natural and man-made catastrophes due to their distinct causal factors, predictability, and potential impact profiles. This approach is correct because regulatory guidelines for catastrophe risk management, such as those implicitly guiding CCMP certification, emphasize a granular understanding of risk drivers. Natural catastrophes, e.g., hurricanes, earthquakes, are often characterized by inherent unpredictability in precise timing and intensity, requiring probabilistic modeling and a focus on resilience and preparedness. Man-made catastrophes, e.g., cyber attacks, industrial accidents, while sometimes having precursors, can also be influenced by human intent or systemic failures, necessitating a greater emphasis on preventative controls, threat intelligence, and rapid response protocols. Acknowledging these differences ensures that the risk assessment is tailored to the specific vulnerabilities and control mechanisms relevant to each catastrophe type, leading to more effective and compliant risk management strategies. An approach that treats all catastrophes as homogeneous for risk assessment purposes is incorrect because it fails to recognize the fundamental differences in their origins and management. This oversight can lead to the application of inappropriate mitigation techniques. For instance, focusing solely on structural resilience for a cyber attack would be a misapplication of resources, as the primary risks are data integrity and operational continuity, not physical damage. This violates the principle of proportionality in risk management, which dictates that resources should be allocated based on the specific nature and likelihood of the risk. An approach that solely focuses on historical frequency data without considering the evolving nature of threats, particularly for man-made catastrophes, is also incorrect. While historical data is valuable, it may not adequately capture emerging threats or the potential for cascading failures in complex systems. Regulatory frameworks often require forward-looking risk assessments that incorporate scenario planning and expert judgment, especially for risks that are not purely stochastic. Finally, an approach that prioritizes the most visually dramatic or widely publicized catastrophe types without a systematic assessment of their actual impact on the specific organization or portfolio is professionally unsound. This can lead to a misallocation of attention and resources, neglecting less visible but potentially more impactful risks. Effective risk management requires a data-driven and context-specific evaluation, not one based on sensationalism or anecdotal evidence, which is a core tenet of responsible risk management practice. Professionals should adopt a decision-making process that begins with a thorough understanding of the organization's specific context and the regulatory environment. This involves identifying all potential catastrophe types, categorizing them as natural or man-made, and then evaluating the unique characteristics of each category in terms of predictability, controllability, and potential impact. The chosen risk assessment methodology must then be demonstrably aligned with these characteristics and the relevant regulatory requirements, ensuring that mitigation strategies are proportionate, effective, and forward-looking. Question 5. The performance metrics show a recent increase in the frequency of moderate severity events and a slight uptick in the severity of high-impact events, deviating from the long-term historical averages. Which of the following best describes the most appropriate professional response for a certified catastrophe risk management professional, CCMP, operating under U.S. regulatory frameworks? Option A. Focus solely on the financial impact of these recent events and adjust capital reserves based on immediate loss experience. Option B. Prioritize qualitative assessments from regional managers regarding perceived changes in catastrophe risk without quantitative validation. Option C. Conduct a detailed analysis of the underlying drivers of these observed changes in catastrophe frequency and severity, updating catastrophe models and risk mitigation strategies accordingly. Option D. Reclassify the observed deviations as statistical outliers and maintain current risk management strategies, assuming a return to historical norms. The correct answer is C. Conduct a detailed analysis of the underlying drivers of these observed changes in catastrophe frequency and severity, updating catastrophe models and risk mitigation strategies accordingly. Explanation: this scenario is professionally challenging because it requires a risk manager to interpret complex performance data in the context of catastrophe characteristics, specifically frequency, severity, and impact, while adhering strictly to the CCMP regulatory framework. The CCMP designation implies a focus on U.S. regulatory standards and best practices for catastrophe risk management. The core challenge lies in distinguishing between statistical anomalies and genuine shifts in catastrophe risk profiles, which have significant implications for capital allocation, reinsurance strategy, and overall business resilience. A nuanced understanding of how these characteristics interact and evolve is critical for effective risk governance. Correct approach involves a comprehensive evaluation of the observed performance metrics against established catastrophe models and historical data, considering the interplay of frequency, severity, and impact. This approach aligns with CCMP principles by emphasizing data-driven decision-making and a forward-looking perspective on risk. Specifically, it requires the risk manager to assess whether the observed deviations are indicative of a changing risk landscape, e.g., increased severity of events, higher frequency of moderate events, or are within acceptable statistical variance. This aligns with regulatory expectations for robust risk assessment and management, ensuring that the organization's risk appetite and capital adequacy remain appropriate in light of evolving catastrophe threats. The CCMP framework, grounded in U.S. financial regulation and insurance oversight, mandates a proactive and analytical approach to understanding and managing systemic risks, including those posed by catastrophes. An incorrect approach would be to dismiss the observed performance metrics as mere statistical noise without further investigation. This fails to acknowledge the potential for fundamental shifts in catastrophe risk, which could lead to underestimation of future losses and inadequate risk mitigation strategies. Such an approach would violate the CCMP emphasis on diligent risk assessment and could contravene regulatory requirements for prudent risk management, potentially exposing the organization to unforeseen financial distress. Another incorrect approach is to solely focus on the financial impact of past events, without dissecting the underlying drivers of frequency and severity. A financial impact is a critical outcome. Understanding the contributing factors of catastrophe characteristics is essential for developing effective mitigation and adaptation strategies. This narrow focus neglects the proactive risk management principles central to the CCMP designation and U.S. regulatory expectations for understanding the root causes of risk exposure. A third incorrect approach is to rely on anecdotal evidence or qualitative assessments without grounding the analysis in the quantitative performance metrics and established modeling frameworks. While qualitative insights can be valuable, the CCMP framework and regulatory oversight demand a rigorous, data-backed approach to risk management. Over-reliance on subjective judgment without empirical support can lead to biased assessments and ineffective risk management decisions. The professional decision-making process for similar situations should involve a structured, multifaceted analysis. First, thoroughly review and understand the performance metrics, identifying any deviations from expected outcomes. Second, contextualize these deviations by examining the underlying characteristics of catastrophes, frequency of events, severity of individual events, and the broader impact on the organization and its stakeholders. Third, compare these observations against existing catastrophe models, historical data, and forward-looking projection, considering factors like climate change and evolving urban development. Fourth, engage with subject matter experts and utilize appropriate analytical tools to assess the statistical significance and potential drivers of any observed trends. Finally, translate these findings into actionable risk management strategies, ensuring alignment with the organization's risk appetite, regulatory requirements, and overall business objectives. Question 6. Governance review demonstrates that following a major hurricane, the catastrophe risk management team is developing a response strategy. Which of the following approaches best aligns with regulatory compliance and minimizes potential liability for the insurer? Option A. Prioritize immediate deployment of repair contractors based on pre-existing relationships and internal cost-saving targets, with a secondary review of policy terms. Option B. Focus on managing the insurer's overall risk exposure by adhering strictly to internal risk appetite guidelines, even if it means deviating from specific policy clauses in the interest of broader portfolio protection. Option C. Conduct a comprehensive review of the insurance policy's terms and conditions, relevant statutory obligations, and applicable case law concerning third-party liability before authorizing any significant actions or communications. Option D. Rely on verbal agreements with key contractors and policyholders to expedite the claims process, assuming these informal understandings will be sufficient for legal purposes. Correct answer is A. Prioritize immediate deployment of repair contractors based on pre-existing relationships and internal cost-saving targets, with a secondary review of policy terms. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a catastrophe risk management professional to navigate the complex interplay between contractual obligations, regulatory compliance, and potential third-party liability following a significant insured event. The professional must balance the immediate need to manage claims and mitigate further damage with the long-term legal implications of their actions and communications. Missteps can lead to costly litigation, reputational damage, and regulatory sanctions, underscoring the need for meticulous adherence to established protocols and legal frameworks. Correct approach analysis. The correct approach involves a thorough review of the insurance policy's terms and conditions, relevant statutory obligations, and established case law pertaining to liability in disaster scenarios. This includes identifying any exculpatory clauses, limitations of liability, or specific duties owed to policyholders and potentially affected third parties. The professional must then ensure all actions taken, including claims handling, repair oversight, and communication, strictly align with these legal and contractual parameters. This proactive legal and contractual diligence is paramount to avoiding breaches of contract or tortious liability, thereby protecting the insurer and its stakeholders from undue legal exposure. Incorrect approach is analysis, an approach that prioritizes immediate cost containment without a comprehensive legal and contractual review, risks overlooking critical policy provisions or statutory duties. This could lead to actions that, while seemingly cost-effective in the short term, expose the insurer to significant liability for breach of contract or negligence. For instance, rushing repairs without proper contractual authorization or failing to adhere to mandated notification periods could create grounds for legal challenge. An approach that focuses solely on the insurer's internal risk appetite, disregarding specific policy language and applicable laws, is also professionally unacceptable. While internal risk management is important, it cannot supersede contractual commitments or legal requirements. Ignoring these external constraints can result in actions that are contractually invalid or legally prohibited, leading to disputes and potential regulatory penalties. An approach that relies on informal agreements or verbal assurances from contractors or policyholders, without documenting them and ensuring they align with the policy and legal framework is highly problematic. Such informalities can create ambiguity and are often difficult to enforce in a legal setting, potentially leading to disputes over scope of work, payment, or liability. This lack of formal, legally sound documentation is a significant failure in risk management and legal compliance. Professional reasoning. Professionals in this field must adopt a systematic approach that integrates legal and contractual considerations into every stage of catastrophe response. This involves 1. Understanding the specific policy and its limitations. 2. Identifying all applicable statutory and regulatory requirements. 3. Consulting with legal counsel when complex liability issues arise. 4. Documenting all decisions and actions meticulously, ensuring they are defensible from both a contractual and legal standpoint. 5. Prioritizing clear, accurate, and legally compliant communication with all parties involved. Question 7. Quality control measures reveal that a catastrophe risk management professional responsible for assessing the potential financial impact of a major hurricane on a publicly traded company has gathered preliminary data suggesting significant supply chain disruptions and potential damage to key manufacturing facilities. This information, if confirmed, could materially affect the company's stock price. The professional is considering how to proceed with this information. Which of the following actions best aligns with regulatory requirements and professional ethics in the U.S. capital markets? Option A. Conduct a thorough internal assessment of the potential impact. Consult with legal and compliance to determine materiality and disclosure timing, and prepare for a potential public announcement once the information is sufficiently verified and deemed material. Option B. Privately communicate the preliminary findings and potential impact to a few key institutional investors to allow them to adjust their portfolios accordingly. Option C. Immediately issue a press release to the market with all preliminary data and potential scenarios, regardless of their confirmation status, to ensure full transparency. Option D. Withhold all information regarding the potential hurricane impact until the full extent of the damage is known and quantifiable, even if this takes several weeks. The correct answer is A. Conduct a thorough internal assessment of the potential impact. Consult with legal and compliance to determine materiality and disclosure timing, and prepare for a potential public announcement once the information is sufficiently verified and deemed material. Explanation. This scenario is professionally challenging because it requires a catastrophe risk management professional to navigate the complex interplay between capital markets and regulatory compliance, specifically concerning the disclosure of material non-public information. The CCMP designation implies a responsibility to uphold the integrity of financial markets and protect investors. The core challenge lies in determining when information about a potential catastrophe event becomes material enough to warrant disclosure, and how to manage the flow of such information to avoid insider trading or market manipulation, all within the strict confines of the relevant regulatory framework. The correct approach involves a thorough assessment of the potential impact of the catastrophe event on the company's financial performance and stock price, considering both the likelihood and magnitude of the event. This assessment must be conducted in consultation with legal and compliance departments to ensure adherence to all disclosure obligations and prohibitions against trading on material non-public information. This aligns with the principles of fair disclosure and market integrity, which are fundamental to capital markets regulation. Specifically, under U.S. securities laws, such as those enforced by the Securities and Exchange Commission, SEC, companies have a duty to disclose material information in a timely and accurate manner to prevent unfair advantages. The definition of material generally refers to information that a reasonable investor would consider important in making an investment decision. The prohibition against trading on material non-public information is a cornerstone of insider trading laws, designed to maintain investor confidence and a level playing field. An incorrect approach that involves immediately disclosing all preliminary or speculative information about a potential catastrophe event to the market is flawed. This could lead to market volatility based on unconfirmed data, potentially causing investor panic or misinformed investment decisions. It also risks violating regulations that require information to be sufficiently developed and verified before public dissemination. Another incorrect approach, which is to withhold all information about the potential catastrophe event until the event has fully materialized and its impact is definitively quantifiable, is also problematic. This could be seen as a failure to disclose material information in a timely manner, especially if the event's potential impact is significant and could influence investor decisions. This could lead to accusations of misleading the market or engaging in selective disclosure, violating the principle of equal access to material information. A third incorrect approach, which is to privately inform select institutional investors about the potential catastrophe event before it is publicly disclosed, represents a clear violation of insider trading regulations. This constitutes selective disclosure, providing an unfair advantage to certain investors over the general public and undermining market fairness. The professional decision-making process for similar situations should involve a structured risk assessment framework. This includes 1. Identifying the potential catastrophe event and its potential impact. 2. Assessing the materiality of the information based on its potential to influence investment decisions. 3. Consulting with legal and compliance teams to understand specific disclosure obligations and prohibitions. 4. Developing a clear communication strategy that balances the need for timely disclosure with the avoidance of premature or speculative announcements. And 5. Ensuring that any trading by insiders is conducted in accordance with established policies and blackout periods. Question 8. Market research demonstrates that a coastal region experiencing significant in-migration of retirees and a concurrent increase in population density in low-lying areas is facing evolving catastrophe risk. As a certified catastrophe risk management professional, CCMP, which approach best aligns with regulatory requirements and professional ethics for assessing and pricing catastrophe insurance in this evolving environment. Option A. Broadly increase insurance premiums across all policyholders in the region, citing general population growth and an aging demographic as justification for higher overall risk. Option B. Maintain current pricing and product offerings, focusing solely on historical loss data and assuming that past risk patterns will continue unchanged despite observable demographic and development trends. Option C. Analyze the specific demographic shifts, e.g., age of new residents, concentration in vulnerable zones, and their statistically validated correlation with increased exposure to specific perils like storm surge and flooding, adjusting pricing and product features accordingly based on actuarial principles. Option D. Develop new insurance products that specifically target the retiree demographic with lower premiums, prioritizing market share growth over a detailed assessment of their increased vulnerability to specific catastrophe perils. The correct answer is C. Analyze the specific demographic shifts, e.g., age of new residents, concentration in vulnerable zones, and their statistically validated correlation with increased exposure to specific perils like storm surge and flooding, adjusting pricing and product features accordingly based on actuarial principles. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of how population density and demographic shifts directly impact catastrophe risk exposure, and consequently, insurance pricing and product development. The CCMP designation implies a need to operate within specific regulatory frameworks that govern insurance and risk management. A key challenge is balancing the need for accurate risk assessment with regulatory requirements for fair pricing and non-discriminatory practices. Professionals must avoid making assumptions based on broad demographic categories that could lead to unfair discrimination or mispricing, while still acknowledging the statistically significant impact of demographic factors on risk. The correct approach involves a granular, data-driven analysis that considers how specific demographic characteristics within a defined geographic area correlate with vulnerability to particular catastrophe perils. This aligns with regulatory expectations for actuarial soundness and fair risk assessment. It acknowledges that while demographics are a factor, the application of this information must be objective and statistically validated, avoiding generalizations that could be deemed discriminatory. Regulatory frameworks often mandate that pricing be based on demonstrable risk factors, not on protected characteristics or broad, unsubstantiated assumptions about population groups. An incorrect approach that relies solely on broad demographic generalizations without specific peril correlation fails to meet the standard of actuarial soundness. It risks oversimplifying complex risk profiles and could lead to pricing that is either unfairly punitive or inadequately reflects the actual risk, potentially violating principles of fair competition and consumer protection. Another incorrect approach that ignores demographic shifts entirely, focusing only on historical loss data, is also professionally deficient. This fails to account for evolving population distributions and vulnerabilities, such as increased development in high-risk zones or the aging of populations in vulnerable areas, which can significantly alter future risk exposure. This oversight can lead to inadequate reserves and mispriced products, potentially jeopardizing the financial stability of insurers and failing to meet policyholder needs. A further incorrect approach that prioritizes marketing appeal over risk assessment would be a significant ethical and regulatory failure. Insurance is fundamentally about risk transfer, and decisions must be grounded in a rigorous understanding of that risk. Prioritizing marketability over accurate risk assessment can lead to underwriting practices that are unsustainable and potentially fraudulent, as it misrepresents the true cost of coverage. The professional decision-making process for similar situations should involve a systematic evaluation of available data, including demographic information, hazard maps, and historical loss data. This data should then be analyzed through a statistically sound actuarial lens to identify correlations with specific catastrophe perils. Regulatory compliance should be a constant consideration, ensuring that any demographic analysis used for pricing or product design is objective, non-discriminatory, and actuarially justified. Professionals should consult relevant regulatory guidance and seek expert advice when in doubt about the appropriate application of demographic data in risk management. Question 9. The assessment process reveals that a catastrophe risk management team is evaluating the impact of a recent severe hailstorm on a large urban area using satellite imagery and LiDAR data. The team is considering different methods for processing and interpreting this remote sensing data to estimate insured losses. Which of the following approaches best aligns with professional best practices and regulatory expectations for ensuring the accuracy and reliability of the catastrophe risk assessment? Option A. Prioritize the rapid generation of a preliminary loss estimate by using automated feature detection tools with minimal manual review to provide a quick initial assessment to stakeholders. Option B. Apply a standardized, one-size-fits-all image processing algorithm to both the satellite imagery and LiDAR data, without specific adjustments for the unique characteristics of hail damage or the urban environment. Option C. Independently validate the accuracy and resolution of the satellite imagery and LiDAR data against available ground truth information and known geological or meteorological data for the affected region, and document all data processing steps and assumptions made during feature extraction and damage assessment. Option D. Solely rely on the quality assurance reports provided by the remote sensing data vendors, assuming their metadata accurately reflects the data's suitability for the hail damage assessment. The correct answer is C. Independently validate the accuracy and resolution of the satellite imagery and LiDAR data against available ground truth information and known geological or meteorological data for the affected region, and document all data processing steps and assumptions made during feature extraction and damage assessment. Explanation. The assessment process reveals a common challenge in catastrophe risk management: the effective and compliant integration of remote sensing data into risk models. Professionals must navigate the technical nuances of data quality, interpretability, and application while adhering to stringent regulatory frameworks and ethical standards. The challenge lies in moving beyond mere data acquisition to a robust, defensible methodology that accurately reflects risk and informs decision-making, without introducing bias or misrepresentation. This requires a deep understanding of both the capabilities and limitations of remote sensing technologies within the specific regulatory context of the Certified Catastrophe Risk Management Professional (CCMP) exam. The correct approach involves a systematic validation and calibration process for remote sensing data, ensuring its accuracy and relevance to the specific catastrophe risk being assessed. This includes cross-referencing with ground truth data where possible, understanding the temporal and spatial resolution limitations of the imagery or LiDAR, and documenting the methodologies used for data processing and feature extraction. This aligns with the CCMP emphasis on data integrity and the responsible application of technology to risk assessment, ensuring that decisions are based on reliable information. Regulatory frameworks, while not explicitly detailed in this prompt, generally mandate accuracy, transparency, and due diligence in risk assessment processes, which this approach upholds. An incorrect approach would be to solely rely on the vendor-provided metadata without independent verification of data quality. This fails to meet the professional obligation of due diligence, as vendor claims may not always reflect the actual usability or accuracy of the data for a specific catastrophe risk scenario. It introduces a significant risk of misinterpreting the extent or severity of damage, leading to flawed risk assessments and potentially inadequate mitigation or response strategies. This approach lacks the critical scrutiny required by professional standards and regulatory oversight, which demand a thorough understanding of the data's provenance and limitations. Another incorrect approach is to apply generic remote sensing analysis techniques without considering the specific characteristics of the catastrophe event and the geographic region. Different types of catastrophes, e.g., floods, wildfires, earthquakes, and varying environmental conditions, e.g., vegetation cover, urban density, require tailored data processing and interpretation. Failing to adapt methodologies can lead to inaccurate feature identification, such as misclassifying debris as structural damage or underestimating the extent of inundation. This demonstrates a lack of specialized knowledge and a failure to apply best practices in catastrophe risk assessment, potentially violating professional standards that require context-specific analysis. Finally, an incorrect approach is to prioritize the speed of data processing over the accuracy and completeness of the analysis. While efficiency is important, it should not compromise the integrity of the risk assessment. Rushing through the analysis can lead to overlooking critical details, misinterpreting subtle indicators of damage, or failing to account for all relevant risk factors. This haste can result in an incomplete or inaccurate representation of the catastrophe's impact, undermining the purpose of the risk assessment and potentially leading to poor strategic decisions. Professional decision-making in this context requires a balanced approach, where efficiency is achieved through well-defined processes and robust tools, not by sacrificing analytical rigor. Question 10. Cost-benefit analysis shows that implementing a more sophisticated catastrophe modeling system for hurricane risk would significantly increase operational expenses, yet a less advanced legacy system, while cheaper, has been deemed by internal auditors to have a higher probability of underestimating potential insured losses in a severe event. Given the regulatory framework for insurance solvency and policyholder protection in the United States, which approach to hazard analysis and modeling is most aligned with professional obligations? Option A. Lobby for regulatory changes to allow for less stringent modeling requirements for hurricane-prone regions, citing the high cost of advanced systems. Option B. Invest in the more sophisticated catastrophe modeling system to ensure robust risk assessment and compliance with regulatory expectations for solvency and adequate reserving. Option C. Continue using the legacy modeling system to minimize immediate operational costs, relying on historical data and general industry benchmarks to offset potential underestimation. Option D. Commission a limited, external review of the legacy system's outputs to validate its adequacy, without incurring the full cost of a new system. The correct answer is B. Invest in the more sophisticated catastrophe modeling system to ensure robust risk assessment and compliance with regulatory expectations for solvency and adequate reserving. Explanation. This scenario is professionally challenging because it requires a risk manager to balance the financial implications of hazard mitigation with the regulatory mandate to protect policyholders and the broader community from catastrophic events. The CCMP designation implies a focus on U.S. regulatory frameworks, specifically those governing insurance and disaster risk management. The core challenge lies in interpreting and applying these regulations when faced with competing economic pressures. The correct approach involves prioritizing regulatory compliance and the principles of sound risk management over short-term cost savings. This means ensuring that hazard analysis and modeling are conducted with sufficient rigor to meet or exceed regulatory standards, even if it incurs higher upfront costs. The regulatory justification stems from the fundamental duty of care owed to policyholders and the public interest in maintaining financial stability within the insurance sector. Specifically, regulations like those promulgated by state insurance departments and federal agencies, e.g., FEMA National Flood Insurance Program guidelines, if applicable to the context, mandate that insurers adequately assess and price for catastrophic risks. Failing to do so can lead to undercapitalization, inability to pay claims, and systemic financial instability, all of which are regulatory concerns. Ethical considerations also demand that insurers act prudently to ensure they can fulfill their contractual obligations. An incorrect approach that focuses solely on minimizing immediate expenditure without adequate consideration of the underlying hazard risk would be professionally unacceptable. This failure would stem from a disregard for regulatory requirements that mandate robust risk assessment. For instance, if the analysis is superficial or uses outdated methodologies, it could lead to an underestimation of potential losses, violating principles of solvency and adequate reserving. Another incorrect approach might involve selectively using modeling outputs that favor lower-cost mitigation strategies, even if a more comprehensive analysis indicates greater risks. This selective application of data is ethically questionable and likely violates regulatory expectations for objective and thorough risk assessment. A third incorrect approach could be to defer necessary investments in advanced modeling capabilities, citing budget constraints, without demonstrating that existing methods are demonstrably sufficient to meet regulatory standards for hazard analysis. This demonstrates a failure to proactively manage risk as required by regulatory oversight. The professional decision-making process for similar situations should involve a systematic evaluation of regulatory requirements, the inherent uncertainties of hazard modeling, and the potential consequences of inadequate risk assessment. This includes consulting relevant regulatory guidance, engaging with subject matter experts in catastrophe modeling, and documenting the rationale for chosen methodologies and mitigation strategies. The ultimate decision should be grounded in a commitment to fulfilling regulatory obligations and upholding the principles of responsible risk management, even when faced with cost pressures. Question 11. What factors determine the appropriate selection of hydrological modeling techniques for catastrophe risk assessment under the Certified Catastrophe Risk Management Professional (CCMP) regulatory framework, ensuring both scientific rigor and regulatory compliance? Option A. The reliance on proprietary, black box hydrological models that are not subject to independent validation or transparency regarding their internal workings. Option B. The availability of validated hydrological models that accurately represent the physical processes of the specific catastrophe risk, are transparent in their methodology, and are computationally feasible for regulatory reporting. Option C. The use of the most complex and data-intensive hydrological models available, regardless of computational cost or the specific needs of the catastrophe risk being assessed. Option D. The selection of hydrological models based solely on their historical performance in unrelated geographic regions or for different types of hydrological events. The correct answer is B. The availability of validated hydrological models that accurately represent the physical processes of the specific catastrophe risk are transparent in their methodology and are computationally feasible for regulatory reporting. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a catastrophe risk manager to select appropriate hydrological modeling techniques for regulatory compliance without resorting to overly simplistic or computationally intensive methods. The challenge lies in balancing the need for accuracy and defensibility under the relevant regulatory framework with practical considerations of resources and timelines. A failure to select the correct modeling approach can lead to inaccurate risk assessments, inadequate capital allocation, and non-compliance with regulatory mandates, potentially resulting in financial penalties and reputational damage. Careful judgment is required to ensure the chosen model is fit for purpose, scientifically sound, and aligns with the specific requirements of the Certified Catastrophe Risk Management Professional (CCMP). Exams jurisdiction. Correct approach analysis. The correct approach involves selecting hydrological modeling techniques that are validated, transparent, and capable of capturing the key physical processes relevant to the specific catastrophe risk being assessed, while also being computationally feasible for routine use and regulatory reporting. This aligns with the CCMP emphasis on robust and defensible risk management practices. Regulatory frameworks typically require models to be based on sound scientific principles and to be capable of producing outputs that can be used to inform decision-making regarding capital adequacy and risk mitigation. The chosen method should allow for clear documentation of assumptions, data inputs, and model limitations, facilitating regulatory review and audit. Incorrect approaches analysis. One incorrect approach is to solely rely on proprietary, black box models without understanding their underlying methodologies or validation processes. This fails to meet regulatory requirements for transparency and defensibility, as regulators need to understand how risk is being calculated. Another incorrect approach is to select the most complex and data-intensive modeling technique available without a clear justification for its necessity, potentially leading to excessive computational costs and delays, and not necessarily improving the accuracy of the risk assessment for regulatory purposes. Furthermore, using models that have not been validated for the specific geographic region or type of hydrological event being studied is a significant regulatory and ethical failure, as it compromises the reliability of the risk assessment. Professional reasoning. Professionals should adopt a systematic approach to selecting hydrological models. This involves first understanding the specific regulatory requirements of the jurisdiction for catastrophe risk management. Next, they should identify the key hydrological processes that drive the catastrophe risk in question. Then, they should evaluate available modeling techniques based on their scientific validity, data requirements, computational feasibility, transparency, and track record of validation for similar applications. The decision should prioritize models that offer a justifiable balance between accuracy, defensibility, and practicality, ensuring that the outputs are suitable for regulatory reporting and risk management decisions. Question 12. Examination of the data shows a significant discrepancy between the reported insured values for coastal properties in a specific region and the estimated replacement costs derived from independent construction cost databases. This discrepancy could materially impact the accuracy of catastrophe risk models and the adequacy of the company's reinsurance program. Which of the following approaches best addresses this situation? Option A. Adjust the replacement cost estimates downwards to align with the reported insured values, assuming that policyholders have accurately declared their property values. Option B. Proceed with the analysis using the reported insured values, assuming they represent the most current and accurate figures available for policyholder coverage. Option C. Initiate a process to reconcile the discrepancy by cross-referencing the reported insured values with other available data sources, engaging with data providers to understand the variance, and documenting any unresolved issues before finalizing the risk assessment. Option D. Immediately halt all further analysis and demand a complete reevaluation of all historical data from all sources before any progress can be made. Correct answer is B. Proceed with the analysis using the reported insured values, assuming they represent the most current and accurate figures available for policyholder coverage. Explanation. Scenario analysis. This scenario presents a common challenge in catastrophe risk management: the inherent uncertainty and potential for error in data used for critical decision-making. Professionals must navigate situations where data, while seemingly comprehensive, may contain inaccuracies or omissions that could lead to flawed risk assessments, inadequate mitigation strategies, and ultimately, significant financial and operational consequences. The challenge lies in balancing the need for timely decisions with the imperative of data integrity, requiring a robust framework for validation and a commitment to transparency about data limitations. Correct approach analysis. The correct approach involves a systematic process of data validation and reconciliation. This entails cross-referencing information from multiple independent sources, employing statistical methods to identify outliers or anomalies, and engaging with data providers to clarify discrepancies. Regulatory frameworks, such as those governing financial reporting and risk management in the insurance sector, e.g., Solvency Roman II in the EU, or NAIC guidelines in the US, depending on the exam's specified jurisdiction, often mandate robust data governance and quality assurance processes. Adhering to these principles ensures that decisions are based on the most reliable information available, fulfilling ethical obligations to stakeholders and regulatory requirements for prudent risk management. This approach prioritizes accuracy and completeness, minimizing the risk of misinformed actions. Incorrect approach is analysis. Proceeding with the analysis without addressing the identified data discrepancies is a failure to uphold professional due diligence. This approach ignores the potential for significant errors to skew the risk assessment, leading to misallocation of resources for mitigation or inaccurate pricing of insurance products. It violates the ethical principle of acting with competence and care, and potentially contravenes regulatory mandates for accurate reporting and risk assessment. Accepting the data at face value without any attempt at verification or reconciliation is another unacceptable approach. This demonstrates a lack of critical thinking and a disregard for the foundational importance of data quality in risk management. It exposes the organization to undue risk and could be seen as a breach of fiduciary duty if it leads to adverse outcomes. Regulatory bodies expect professionals to actively seek out and address data quality issues, not to passively accept potentially flawed information. Relying solely on the most readily available data source, even if it appears authoritative, without considering other potential sources or validation methods, is also professionally unsound. This approach risks perpetuating errors present in that single source and fails to leverage the benefits of diverse data inputs. It overlooks the principle of seeking corroboration, a fundamental aspect of sound analytical practice and a common expectation in regulatory oversight. Professional reasoning. Professionals should adopt a decision-making framework that prioritizes data integrity. This involves 1. Initial data assessment. Critically review all incoming data for obvious inconsistencies or gaps. 2. Source verification. Identify the origin of the data and assess the reliability and reputation of the source. 3. Cross-referencing and validation. Compare data points with information from alternative, independent sources. Employ statistical techniques to detect anomalies. 4. Discrepancy resolution. Actively investigate any identified discrepancy. This may involve direct communication with data providers, internal data stewards, or subject matter experts. 5. Documentation. Maintain a clear record of data sources, validation steps, identified issues, and resolutions. 6. Transparency. Clearly communicate any remaining data limitations or uncertainties to decision makers. 7. Continuous improvement. Establish processes for ongoing data quality monitoring and feedback loops to improve data collection and management. Question 13. When evaluating agricultural vulnerability to catastrophic events, which approach best aligns with the principles of proactive risk management and regulatory compliance for a certified catastrophe risk management professional? Option A. A focus solely on historical loss data, assuming past patterns will accurately predict future catastrophic events. Option B. A comprehensive, multi-hazard risk assessment integrating climate projection, historical data, and site-specific vulnerabilities. Option C. Relying exclusively on the purchase of catastrophe insurance as the primary risk management strategy, without implementing mitigation measures. Option D. Prioritizing the assessment of frequent, low-impact events while downplaying the significance of rare, high-impact catastrophic events. The correct answer is B. A comprehensive multi-hazard risk assessment integrating climate projections, historical data, and site-specific vulnerabilities. Explanation. This scenario is professionally challenging because agricultural operations are inherently exposed to a wide range of catastrophic risks, including extreme weather events, pestilences, and market volatility, all of which can be exacerbated by climate change. A certified catastrophe risk management professional, CCMP, must navigate complex interdependencies between environmental factors, crop yields, livestock health, and economic viability, while adhering to specific regulatory frameworks. The CCMP role demands a holistic understanding that goes beyond simple insurance coverage to encompass proactive risk mitigation and resilience building. Careful judgment is required to balance the immediate financial needs of agricultural producers with long-term sustainability and regulatory compliance. The correct approach involves a comprehensive, multi-hazard risk assessment that integrates climate projections, historical data, and site-specific vulnerabilities. This approach aligns with the principles of robust risk management, emphasizing the identification and quantification of potential losses from various catastrophe types. Regulatory frameworks, such as those governing agricultural insurance programs or environmental impact assessments, often mandate such thorough evaluations to ensure adequate preparedness and to inform policy decisions. Ethically, this approach prioritizes the long-term well-being of agricultural communities and the stability of food supply chains by proactively addressing systemic risks. An approach that focuses solely on historical loss data without considering forward-looking climate change impacts is professionally unacceptable. This failure stems from a lack of adherence to the evolving regulatory landscape that increasingly requires consideration of future climate scenarios. It also represents an ethical lapse by not adequately preparing stakeholders for emerging and amplified risks, potentially leading to underinsurance or inadequate mitigation strategies. An approach that prioritizes only the most frequent, low-impact events while neglecting low-frequency, high-impact catastrophic events is also professionally flawed. This oversight can lead to a false sense of security and leaves agricultural operations critically exposed to events that could cause widespread devastation. Regulatory requirements for catastrophe risk management typically mandate the assessment of tail risks, and failing to do so violates the spirit and often the letter of these regulations. Ethically, this approach fails to protect vulnerable agricultural producers from existential threats. An approach that relies exclusively on insurance as a risk management tool, without incorporating mitigation and adaptation strategies, is incomplete and professionally deficient. While insurance is a critical component of risk transfer, it does not reduce the underlying vulnerability of agricultural assets. Regulatory expectations for CCMP extend beyond mere insurance placement to encompass a broader spectrum of risk management, including physical and operational resilience. Ethically, this approach places an undue burden on insurance mechanisms and fails to empower producers with strategies to reduce their exposure and enhance their capacity to withstand and recover from catastrophes. The professional decision-making process for similar situations should involve a systematic framework. First, clearly define the scope of the assessment, including the specific agricultural assets, geographic areas, and types of catastrophic risks to be considered. Second, gather relevant data, encompassing historical records, climate models, and site-specific information. Third, conduct a thorough risk assessment, identifying vulnerabilities and quantifying potential impacts, ensuring that both historical and projected future risks are addressed. Fourth, develop a comprehensive risk management plan that includes a mix of mitigation, adaptation, transfer insurance, and contingency measures. Finally, regularly review and update the assessment and plan to reflect changing conditions and emerging risks, ensuring ongoing compliance with regulatory requirements and ethical obligations. Question 14. Compliance review shows that a catastrophe risk management professional is assessing the potential impacts of disruptions on an organization's resilience. The professional is considering two primary scenarios. Scenario A, which focuses exclusively on the direct physical damage to critical infrastructure caused by a major hurricane, and Scenario B, which analyzes how a simultaneous cyber attack could disrupt communication networks and supply chains, thereby amplifying the impact of a subsequent, less severe weather event. Which approach best demonstrates a comprehensive understanding of assessing potential impacts of disruption in a catastrophe risk management context? Option A. Scenario A, as it focuses on the most significant and direct physical threat typically associated with major catastrophe events. Option B, an approach that prioritizes disruptions with the highest historical frequency, regardless of their potential amplification effect during a catastrophe. Option C, Scenario B, as it considers the interplay between different types of disruptions and their potential to exacerbate catastrophe impacts. Option D, a hybrid approach that equally weights the probability and impact of direct physical damage and indirect operational disruptions. The correct answer is C. Scenario B, as it considers the interplay between different types of disruptions and their potential to exacerbate catastrophe impacts. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of how different types of disruptions, even those seemingly minor, can cascade and impact an organization's ability to manage catastrophe risks. The CCMP designation implies a responsibility to not only identify direct catastrophe impacts, but also the indirect and systemic effects that can exacerbate vulnerability. The core challenge lies in moving beyond a static assessment of direct physical damage to a dynamic evaluation of operational resilience and the interconnectedness of various risk factors. The correct approach involves a comprehensive analysis that considers both direct and indirect impacts of disruptions, recognizing that a seemingly minor operational failure can have significant consequences in a catastrophe scenario. This aligns with the principles of robust risk management, which emphasize understanding interdependencies and potential cascading failures. Specifically, regulatory frameworks for financial institutions and critical infrastructure often mandate such holistic assessments to ensure business continuity and systemic stability. Ethically, a CCMP has a duty to provide a complete and accurate risk picture, which includes these less obvious but potentially critical impacts. An approach that focuses solely on direct physical damage is incorrect because it fails to account for the operational and supply chain vulnerabilities that can cripple an organization's response and recovery capabilities during a catastrophe. This oversight can lead to underestimation of the total impact and a false sense of security, violating the professional duty to conduct thorough risk assessments. An approach that prioritizes only the most probable, low-impact disruptions is also incorrect. While probability is a factor, the potential severity of impact during a catastrophe event, even for less probable disruptions, must be considered. Ignoring these can lead to critical gaps in preparedness. This failure to consider the full spectrum of potential impacts, particularly those that could be amplified by a catastrophe, is a significant professional failing. An approach that relies solely on historical data without considering emerging threats or changes in operational complexity is insufficient. Catastrophe risks are evolving, and past performance is not always indicative of future outcomes. A failure to adapt assessments to current and future risk landscapes can lead to outdated and ineffective risk management strategies, which is a breach of professional diligence. The professional decision-making process for similar situations should involve a structured approach. 1. Define the scope of the risk assessment, explicitly including operational, supply chain, and technological dependencies. 2. Employ a multifaceted analytical framework that considers direct, indirect, and cascading impacts. 3. Utilize scenario planning that integrates various disruption types with potential catastrophe events. 4. Continuously review and update assessments based on emerging threats, technological advancements, and changes in the operational environment. 5. Seek input from diverse internal stakeholders to capture a comprehensive understanding of vulnerabilities. Question 15. Stakeholder feedback indicates a desire for storm surge modeling results that are easily digestible and present a clear, low-risk scenario for regulatory filings. Considering the regulatory framework for catastrophe risk management professionals, which of the following approaches best balances the need for clear communication with the imperative of accurate and compliant risk representation? Option A. Relying exclusively on historical storm surge data without incorporating forward-looking projections or considering potential impacts of climate change, as this provides a concrete and easily verifiable baseline. Option B. Utilizing a proprietary, cutting-edge storm surge model that offers highly granular outputs, even if its validation and acceptance within the specific regulatory framework are not yet fully established. Option C. Presenting simplified storm surge projections that focus on the most favorable historical outcomes, omitting complex variables and potential extreme event scenarios to streamline reporting. Option D. Employing a validated, industry-standard storm surge model with clearly documented assumptions and limitations, and providing detailed explanations of the model's outputs and their inherent uncertainties to all stakeholders, including regulators. The correct answer is D. Employing a validated, industry-standard storm surge model with clearly documented assumptions and limitations, and providing detailed explanations of the model's outputs and their inherent uncertainties to all stakeholders, including regulators. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the technical accuracy of storm surge modeling with the practical needs and understanding of diverse stakeholders, including regulators, insurers, and community leaders. The core challenge lies in translating complex scientific outputs into actionable insights that are both compliant with regulatory requirements and comprehensible to non-technical audiences. Misinterpreting or misrepresenting the model's limitations can lead to significant financial, reputational, and even safety risks for all parties involved. Careful judgment is required to ensure that the chosen modeling approach and its communication are transparent, defensible, and aligned with the Certified Catastrophe Risk Management Professional, CCMP, ethical standards, and the relevant regulatory framework. Correct approach analysis. The correct approach involves selecting a storm surge modeling methodology that is recognized and validated within the relevant regulatory framework, such as those overseen by the National Association of Insurance Commissioners, NAIC, for U.S. insurers. This methodology should be capable of producing outputs that can be directly integrated into risk assessments and solvency calculations as required by state insurance departments. Crucially, the chosen model's assumptions, limitations, and uncertainties must be clearly communicated to all stakeholders. This transparency is vital for regulatory compliance, as it allows regulators to understand the basis of the risk assessments and to ensure that the insurer's capital is adequate to cover potential losses. Ethical practice dictates that professionals must not present models as infallible or their outputs as absolute certainties, but rather as tools for informed decision-making under uncertainty. Adherence to established modeling standards and guidelines ensures that the risk management practices are robust and meet the expectations of regulatory bodies. Incorrect approaches analysis, an approach that prioritizes the use of proprietary, cutting-edge modeling software without demonstrating its validation or acceptance within the regulatory framework, is professionally unacceptable. While innovative, such models may not meet the stringent requirements for data inputs, validation, and output reporting mandated by regulators. This could lead to regulatory scrutiny, fines, or the rejection of the risk assessments. Another incorrect approach would be to simplify the storm surge modeling outputs to the point where critical nuances and uncertainties are lost, especially if this simplification is done to present a more favorable risk profile. This lack of transparency misrepresents the true level of risk and violates ethical obligations to provide accurate information. Regulators rely on a clear understanding of potential exposures, and obscuring this understanding, even unintentionally, can undermine the integrity of the risk management process. Finally, an approach that relies solely on historical storm data without incorporating forward-looking projections or considering the impact of climate change. If such considerations are implicitly or explicitly required by the regulatory environment for long-term solvency, would be insufficient. While historical data is a component, a comprehensive risk assessment often necessitates accounting for evolving environmental conditions to ensure adequate capital reserves are maintained against future, potentially more severe, events. This failure to adapt modeling to current understanding of risk drivers can lead to undercapitalization and regulatory noncompliance. Professional reasoning. Professionals in this field must adopt a decision-making process that begins with a thorough understanding of the applicable regulatory framework and its specific requirements for catastrophe risk modeling. This involves identifying approved methodologies, data standards, and reporting obligations. The next step is to evaluate available modeling tools and approaches against these requirements, prioritizing those that are validated, transparent, and capable of producing defensible results. Crucially, throughout the process, open communication with stakeholders, including regulators, is paramount. This includes proactively disclosing model assumptions, limitations, and the inherent uncertainties in any modeling exercise. When faced with choices, professionals should always err on the side of transparency and adherence to established standards, rather than opting for methods that may be technically advanced but lack regulatory acceptance or clear communication of their limitations. The CCMP designation implies a commitment to ethical conduct and professional diligence, which necessitates a rigorous and transparent approach to risk modeling. Question 16. Regulatory review indicates that a catastrophe risk management professional is tasked with developing a vulnerability function for a portfolio of coastal properties exposed to hurricane risk. The available data includes historical damage reports, meteorological records, and some engineering assessments of building structures. The professional must select a method for quantifying the relationship between hurricane intensity, e.g., wind speed, storm surge, and the expected physical damage to these properties. Which of the following approaches best aligns with the principles of robust catastrophe risk management and regulatory expectations for impact assessment? Option A. Utilize a simplified, linear relationship between wind speed and damage, assuming a uniform impact across all properties in the portfolio, as this is the quickest method to generate an initial estimate. Option B. Employ a proprietary, black box model that claims to provide accurate vulnerability estimates, but does not disclose its underlying methodology or data sources. Option C. Develop a vulnerability function based on a comprehensive review of peer-reviewed scientific literature and empirical data from similar property types and geographic regions, adjusting for specific local characteristics where data permits. Option D. Rely exclusively on the collective experience and qualitative assessments of senior engineers and property managers to define the damage levels associated with different hurricane categories. The correct answer is C. Develop a vulnerability function based on a comprehensive review of peer-reviewed scientific literature and empirical data from similar property types and geographic regions, adjusting for specific local characteristics where data permits. Explanation: this scenario is professionally challenging because it requires a catastrophe risk manager to balance the need for accurate vulnerability assessment with the practical constraints of data availability and regulatory compliance. The core challenge lies in selecting an appropriate vulnerability function that is both scientifically sound and defensible under the relevant regulatory framework, without resorting to overly simplistic or misleading representations of risk. Careful judgment is required to ensure that the chosen function accurately reflects the potential impact of a catastrophe on a specific asset or portfolio, thereby informing effective risk mitigation and capital allocation strategies. The correct approach involves selecting a vulnerability function that is supported by empirical data or robust scientific modeling, and that aligns with the principles of prudent risk management as outlined in the applicable regulatory framework. This approach is right because it ensures that the assessment of potential losses is grounded in evidence and adheres to the standards expected by regulators. Specifically, regulatory guidance often emphasizes the use of methodologies that are transparent, well-documented, and capable of demonstrating a clear link between hazard intensity and the resulting damage or loss. This fosters confidence in the risk assessment and supports informed decision-making by stakeholders and supervisors. An incorrect approach that relies solely on expert opinion without empirical validation is professionally unacceptable because it lacks the objective rigor demanded by regulatory bodies. While expert judgment is valuable, it cannot substitute for data-driven analysis when establishing vulnerability functions, as it may introduce subjective biases and may not be readily defensible to auditors or regulators. Another incorrect approach that uses a generic, one-size-fits-all vulnerability function for diverse asset types or locations is also professionally flawed. This fails to acknowledge the unique characteristics and sensitivities of different assets, leading to potentially inaccurate risk estimations and misallocation of resources. It violates the principle of specificity and proportionality in risk assessment, which is often a cornerstone of regulatory expectations. Professionals should adopt a decision-making framework that prioritizes a thorough understanding of the regulatory requirements for vulnerability assessment. This involves identifying the specific data sources and methodologies permitted or encouraged by the regulator. The process should then involve evaluating available data, considering the limitations, and selecting the most appropriate vulnerability function that balances accuracy with practicality and regulatory compliance. Transparency in the selection process and documentation of assumptions are crucial for defensibility. Question 17. Operational review demonstrates that the increasing frequency and intensity of extreme weather events are posing a significant and evolving threat to the organization's assets and operational continuity. Which of the following approaches best aligns with the professional responsibilities of a certified catastrophe risk management professional, CCMP, in addressing this challenge? Option A. Continue to rely primarily on historical loss data for risk modeling, as this has been the standard practice for many years. Option B. Develop and implement a static, standardized risk mitigation plan that can be applied universally across all potential extreme weather event scenarios. Option C. Integrate forward-looking climate projections and scenario planning into the organization's risk management framework to proactively assess and adapt to potential future impacts. Option D. Implement immediate, short-term operational adjustments to address current weather-related disruptions without a comprehensive review of the overall risk management strategy. The correct answer is C. Integrate forward-looking climate projections and scenario planning into the organization's risk management framework to proactively assess and adapt to potential future impacts. Explanation: scenario analysis. The scenario presents a significant professional challenge for a certified catastrophe risk management professional, CCMP, due to the increasing frequency and intensity of extreme weather events. This trend directly impacts an organization's risk exposure, potentially overwhelming existing risk management frameworks and financial reserves. The CCMP must navigate the complexities of adapting strategies to a dynamic and unpredictable threat landscape, while adhering to regulatory requirements and ethical obligations to protect stakeholders. The challenge lies in proactively identifying, assessing, and mitigating these evolving risks in a way that is both effective and compliant, ensuring the organization's resilience and financial stability. Correct approach analysis. The correct approach involves a comprehensive, forward-looking risk assessment that integrates forward-looking climate projections into the organization's risk management framework. This proactive stance is essential because it directly addresses the core issue, the changing nature of extreme weather events. By incorporating climate science and scenario planning, the CCMP can better anticipate future impacts, rather than solely relying on historical data, which is becoming increasingly unreliable. This aligns with the CCMP ethical duty to provide sound, evidence-based advice and to safeguard the organization's assets and operational continuity. Regulatory frameworks, while not explicitly detailed here as per the prompt's constraints, generally expect risk management professionals to adopt best practices that reflect current and emerging threats. This approach demonstrates due diligence and a commitment to robust risk governance. Incorrect approach is analysis. Relying solely on historical loss data for risk modeling fails to account for the non-stationarity of climate risks. Extreme weather events are no longer predictable based on past patterns alone. This approach is ethically deficient as it provides a false sense of security and exposes the organization to unforeseen losses, violating the duty of care. It also likely falls short of regulatory expectations for forward-looking risk assessment in a changing climate. Focusing exclusively on short-term operational adjustments without a strategic review of the risk framework is insufficient. While immediate responses are important, they do not address the systemic nature of increased extreme weather event frequency and intensity. This approach is professionally inadequate because it is reactive rather than proactive, failing to build long-term resilience. It neglects the fundamental responsibility of a CCMP to ensure the organization's risk management strategy is aligned with evolving threats. Implementing a static, one-size-fits-all risk mitigation plan without considering the specific vulnerabilities to different types of extreme weather events is also problematic. Extreme weather events vary in their impact and the required mitigation strategies. A static plan will likely be ineffective against a diverse range of threats, leading to potential gaps in protection. This approach is professionally unsound as it demonstrates a lack of tailored risk assessment and mitigation, potentially leading to inadequate protection and financial strain. Professional reasoning. Professionals in this field must adopt a dynamic and forward-looking approach to risk management. The decision-making process should involve 1. Acknowledging the evolving nature of threats, particularly climate-related ones. 2. Prioritizing the integration of forward-looking data and scientific projections into risk assessments. 3. Regularly reviewing and updating risk management frameworks and mitigation strategies to ensure their continued relevance and effectiveness. 4. Maintaining a strong ethical compass, prioritizing the long-term well-being and resilience of the organization and its stakeholders. This involves a commitment to continuous learning and adaptation in response to new information and changing environmental conditions. Question 18. Benchmark analysis indicates that a company operating in the United States is subject to greenhouse gas (GHG) emissions reporting requirements. As a certified catastrophe risk management professional (CCMP), which approach best aligns with the regulatory framework and professional responsibilities for managing the catastrophe risks associated with these emissions? Option A. Emphasize voluntary reporting under frameworks like the Task Force on Climate-Related Financial Disclosures, TCFD, to provide comprehensive climate risk information to stakeholders, irrespective of mandatory reporting obligations. Option B. Adopt emissions reporting methodologies and data from international GHG accounting standards to ensure a globally consistent approach to risk management. Option C. Prioritize reporting of Scope 1 emissions as mandated by the U.S. Environmental Protection Agency's Greenhouse Gas Reporting Program, 40 CFR Part 98, and integrate this data into the physical risk assessment of climate-related events. Option D. Focus on reporting Scope 2 emissions, as these often represent a larger portion of a company's carbon footprint and are increasingly emphasized by global sustainability initiatives. The correct answer is C. Prioritize reporting of Scope 1 emissions as mandated by the U.S. Environmental Protection Agency's Greenhouse Gas Reporting Program, 40 CFR Part 98, and integrate this data into the physical risk assessment of climate-related events. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a certified catastrophe risk management professional, CCMP, to navigate the complexities of greenhouse gas, GHG, emissions reporting and its implications for catastrophe risk management, specifically within the context of U.S. regulatory frameworks. The challenge lies in accurately identifying and applying the relevant reporting requirements, and understanding how these emissions data inform risk assessment and mitigation strategies, all while adhering to the strict jurisdictional boundaries of U.S. regulations. Misinterpreting or misapplying these requirements can lead to inaccurate risk profiles, non-compliance, and ultimately, ineffective catastrophe risk management. Correct approach analysis. The correct approach involves a comprehensive understanding of the U.S. Environmental Protection Agency's EPA Greenhouse Gas Reporting Program, 40 CFR Part 98. This program mandates reporting for facilities that emit certain quantities of GHGs. For a CCMP, this means recognizing that direct emissions from a company's operations, Scope 1, are the primary focus of this specific regulation. Understanding the thresholds and reporting categories within 40 CFR Part 98 is crucial for accurate data collection and submission. Furthermore, linking these direct emissions to potential physical risks associated with climate change, such as increased frequency or intensity of extreme weather events, is a core function of catastrophe risk management. This approach aligns with the CCMP responsibility to assess and manage risks arising from environmental factors, including those influenced by GHG emissions. Incorrect approaches analysis, focusing solely on Scope 2 emissions, indirect emissions from purchased electricity, steam, heat, or cooling, without first addressing the mandatory reporting of Scope 1 emissions under 40 CFR Part 98 is an incorrect approach. While Scope 2 emissions are important for a broader sustainability picture, the EPA's GHG reporting program primarily targets direct emitters. This oversight would lead to an incomplete and potentially non-compliant reporting under the specified regulation. Another incorrect approach is to prioritize voluntary reporting frameworks like the Task Force on Climate-Related Financial Disclosures, TCFD, without ensuring compliance with mandatory U.S. EPA regulations. While TCFD is valuable for disclosing climate-related risks and opportunities, it is a voluntary framework. A CCMP primary obligation in this context is to meet the legally mandated reporting requirements first. Neglecting mandatory reporting in favor of voluntary disclosures would be a significant regulatory failure. Finally, attempting to incorporate emissions data from international reporting standards or guidelines without a clear mandate or relevance to U.S. operations is also an incorrect approach. The CCMP designation and the context of this question are strictly bound by U.S. regulations. Applying foreign standards would violate the jurisdictional compliance requirement and misdirect risk management efforts. Professional reasoning. Professionals in catastrophe risk management must adopt a hierarchical approach to regulatory compliance. First, identify and adhere to all mandatory reporting requirements within the relevant jurisdiction. For U.S.-based operations concerning GHG emissions, this means thoroughly understanding and complying with the EPA's Greenhouse Gas Reporting Program, 40 CFR Part 98. Second, integrate this mandatory data into broader risk assessment frameworks, considering both physical and transitional risks. Third, supplement mandatory reporting with voluntary frameworks like TCFD where appropriate, ensuring they enhance, rather than replace, regulatory compliance. Always maintain strict adherence to the specified jurisdictional boundaries. Question 19. Quality control measures reveal that the catastrophe risk management program at a U.S.-based insurance company has been updated based on recent internal risk assessments, but there is no explicit documentation confirming alignment with the National Association of Insurance Commissioners, NAIC, Catastrophe Risk Management Model Act, or its accompanying guidance. Which of the following approaches best addresses this oversight to ensure regulatory compliance and sound risk management practices? Option A. Focus solely on updating the program to meet the minimum statutory requirements of the primary state in which the company operates, as this is the most direct legal obligation. Option B. Engage an external consultant to perform a high-level review of the program and provide a general opinion on its adequacy without specific reference to NAIC model acts or state variations. Option C. Conduct a comprehensive review of the organization's current catastrophe risk management program against the specific requirements and recommendations of the NAIC Catastrophe Risk Management Model Act and relevant state-specific regulations that have adopted or modified it. Option D. Assume that the internal risk assessments are sufficient, as they reflect the company's unique risk profile and operational context, and no further action is needed regarding NAIC guidelines. The correct answer is C. Conduct a comprehensive review of the organization's current catastrophe risk management program against the specific requirements and recommendations of the NAIC Catastrophe Risk Management Model Act and relevant state-specific regulations that have adopted or modified it. Explanation. This scenario presents a professional challenge because it requires a risk management professional to navigate the complexities of implementing National Association of Insurance Commissioners, NAIC, model laws and guidelines within a specific state's regulatory environment, which may have variations or specific interpretations. The challenge lies in ensuring that the chosen implementation strategy not only aligns with the spirit and letter of the NAIC framework, but also meets the practical demands of the organization and the legal requirements of the operating jurisdiction. Careful judgment is required to balance compliance, operational efficiency, and the effective management of catastrophe risks. The correct approach involves a thorough review of the relevant NAIC model laws and accompanying guidance, followed by a detailed assessment of how these requirements translate into actionable policies and procedures for the organization. This includes identifying any state-specific deviations or additional requirements that must be incorporated. The justification for this approach is rooted in the NAIC role as a standard setter for state insurance regulation. Adherence to NAIC models, as adopted and potentially modified by individual states, is fundamental to demonstrating prudent risk management and regulatory compliance. This proactive and comprehensive review ensures that the organization's catastrophe risk management program is robust, compliant, and effectively addresses potential financial impacts from catastrophic events, thereby protecting policyholders and the company's financial stability. An incorrect approach that relies solely on the organization's existing internal risk management framework without explicit consideration of NAIC guidelines would be professionally unacceptable. This failure stems from a disregard for the established regulatory expectations for insurance companies concerning catastrophe risk. Such an approach risks noncompliance with state laws that have adopted NAIC models, potentially leading to regulatory scrutiny, fines, and reputational damage. Another incorrect approach that focuses only on meeting the minimum statutory requirements of the operating state, without considering the broader principles and best practices outlined in NAIC guidance, would also be professionally flawed. Meeting state law is essential. The NAIC framework often represents a higher standard of risk management. Ignoring these broader principles can lead to a less resilient risk management program, leaving the organization more vulnerable to catastrophic events than intended by the regulatory framework. This approach prioritizes form over substance, potentially creating a false sense of security. A third incorrect approach that delegates the entire responsibility for NAIC compliance to a third-party vendor without internal oversight or validation would be professionally unsound. While vendors can provide valuable expertise, the ultimate responsibility for regulatory compliance rests with the organization's management. This delegation without proper oversight can lead to misinterpretations of regulations, inadequate implementation, and a lack of internal understanding and ownership of the catastrophe risk management program. The professional reasoning process for similar situations should involve a structured approach. First, identify all applicable regulatory frameworks, including NAIC models and state-specific laws. Second, conduct a gap analysis between current practices and regulatory requirements. Third, develop and implement a remediation plan that addresses identified gaps, prioritizing actions based on risk and regulatory impact. Fourth, establish ongoing monitoring and review processes to ensure continued compliance and program effectiveness. Finally, foster a culture of compliance and risk awareness throughout the organization. Question 20. Research into the accounting treatment of reinsurance treaties by a UK-regulated insurer reveals that the company has entered into two distinct arrangements, a quota share treaty and an excess of loss treaty. The quota share treaty cedes 50% of all premiums and claims to the reinsurer, while the excess of loss treaty provides coverage for claims exceeding £1 million per event. Which approach best reflects the regulatory compliance requirements for reporting these treaties under the UK's Prudential Regulatory Framework? Option A. Treat both reinsurance treaties as simple expense items, reducing the insurer's reported profit without specific consideration for the risk transfer mechanisms or solvency capital implications. Option B. Classify both the quota share and excess of loss treaties as proportional, applying proportional accounting rules to both arrangements for reporting purposes. Option C. Focus solely on the total amount of premiums ceded under both treaties to determine the impact on the insurer's financial statements, disregarding the specific terms of risk transfer. Option D. Accurately classify the quota share treaty as proportional and the excess of loss treaty as non-proportional, applying the respective regulatory, accounting principles for premium claims and solvency capital calculations for each. The correct answer is D. Accurately classify the quota share treaty as proportional and the excess of loss treaty as non-proportional, applying the respective regulatory accounting principles for premium, claims, and solvency capital calculations for each. Explanation. This scenario is professionally challenging because it requires a deep understanding of how reinsurance treaties, both proportional and non-proportional, interact with regulatory solvency requirements. The challenge lies in accurately assessing the impact of these treaties on the cedent's financial position and ensuring compliance with the specific reporting and capital adequacy rules mandated by the relevant regulatory framework. Misinterpreting the nature of the reinsurance or its regulatory treatment can lead to inaccurate financial reporting, inadequate capital reserves, and potential regulatory sanctions. The correct approach involves a thorough review of the specific wording of the reinsurance treaties, classifying them accurately as either proportional or non-proportional, and then applying the prescribed regulatory accounting principles for each type. This ensures that the cedent's balance sheet and solvency capital are reported in accordance with the rules, reflecting the true economic substance of the reinsurance arrangements. For instance, proportional treaties typically reduce both gross and net premiums and claims, impacting the calculation of premium income and incurred losses, while non-proportional treaties, such as excess of loss, primarily protect against large, infrequent losses and affect the calculation of risk capital and potentially the recognition of contingent liabilities. Adhering to these principles is crucial for maintaining regulatory compliance and demonstrating financial soundness to supervisors. An incorrect approach that focuses solely on the premium ceded without considering the underlying risk transfer mechanism of the treaty would fail to comply with regulatory requirements. For example, treating all ceded premiums as a simple expense without accounting for the risk mitigation provided by a non-proportional treaty would misrepresent the cedent's risk profile and capital adequacy. Another incorrect approach might be to misclassify a proportional treaty as non-proportional or vice versa. This would lead to the application of incorrect regulatory accounting rules, potentially overstating or understating the impact on solvency capital and financial statements. For example, incorrectly treating a proportional treaty as non-proportional might lead to an underestimation of the required capital for underwriting risk, as the regulatory framework typically requires capital to cover a larger portion of the net retained risk under proportional arrangements. Failure to accurately reflect the risk transfer and its regulatory implications constitutes a breach of regulatory obligations. Professionals should adopt a systematic decision-making process that begins with a clear understanding of the specific regulatory framework governing the cedent. This involves identifying the relevant rules for reinsurance accounting and solvency capital calculation. Next, each reinsurance treaty must be meticulously examined to determine its type, proportional or non-proportional, and the specific terms and conditions that dictate the risk transfer. The appropriate regulatory treatment for each treaty type must then be applied, ensuring that all reporting and capital requirements are met. Regular review and validation of these assessments against regulatory guidance and any updates are essential to maintain ongoing compliance.